producer price inflation for May came in below expectations at 4.9% year on year from 5.4% the previous month. On the line, Elna Moolman, South Africa Economist at Macquarie. We might have lost her, but hopefully we'll get her back on the line. Elna, are you there?
Yes.
Oh, Elna, South Africa, you can see as the inflation coming in below expectations. So for now, it's good news. But if you look at some of the detail there, electricity and water, for instance, double-digit gains that we've seen. So the fear that this is not sustainable, we've got a weak rand potentially feeding through to higher price trends in the months down the line.
Yes, I do think there are a couple of elements that we need to monitor very carefully. So I think the electricity issue is reasonably well appreciated by now, but some of the things that I think are worthwhile monitoring is what is happening to food inflation. So in today's data, it's nearly 7% year on year and gradually rising inflation rate there. And then the other component that bothers me a little bit is car prices, where at the PPI level, we're now seeing inflation of about 6% year on year, whereas in the CPI data, new car inflation is only at this stage about 2%. Now, if it were to increase from that 2% to the 6% that we're seeing at the PPI level, it would make a meaningful impact on the CPI numbers given the high weight that cars have. I think overall we have to acknowledge that this is still reasonably good news from two perspectives. One is that if I go back to early last year, then this new measure of PPI reflected more than 8% inflation, and now it is less than 5%, so that is definitely encouraging. And I think the second aspect that's very encouraging is that this is despite the rand weakness that we've had since the second half of last year. Now we should already be starting to see that pass through to inflation, and so if with that pass through we're seeing less than 5% inflation, it is encouraging in terms of the limited ability of getting much pass through from rand weakness. So it is then also encouraging in terms of the pass-through that we're likely to see from the current rand depreciation, although we'll only see that towards next year.
Elna, if you could just be a bit more specific about that pass-through. So weaker currency should flow through to higher prices. So why is it that we haven't seen that pass through yet? Is it just a matter of time, or are there certain factors, the power relations within the economy, consumers being adamant that they will not tolerate higher prices? What is it?
I think it's a combination of those two things. So there are components in which you will always see immediate full pass-through, for example, oil prices. And once you see that petrol price impact, you typically see some indirect impact on some of the other components. But I think what is happening now is that because the economy is so weak, producers are finding it very difficult to pass on all of the price increases. So it seems as if they are absorbing some of this into their margins.
What are the highlights in terms of the elements within the economy where price pressures are very weak? So the low inflation components from which we draw encouragement.
So I think it is reasonably broad-based. If I look at today's numbers, for example, most of the consumer-related products are still recording very low inflation. If I look at clothing, for example, the clothing and footwear and textiles category is recording less than 3% inflation. And the same is true for most of the other components. I think here of something like furniture, for example. And those are also components where one would expect to see some pressure if the rand is weaker. But again, I think the pass-through from the rand is somewhat diluted given the weakness of the consumer. And then we also have to acknowledge that if global growth is reasonably weak and you don't have much global pressure in something like clothing prices, you shouldn't expect to see too much in South Africa.
Elna, I'm sure you saw Jill Marcus's speech yesterday, and it probably depends which component one looks at. But what really struck me was the paragraph where she highlights the vulnerabilities of the South African economy. What did you take away from that speech?
Absolutely, I agree with you. And I think the one remark in that context that was quite important was that she signaled that the Reserve Bank will not be too preemptive this time around in terms of any interest rate hikes. So I think she was trying to very clearly signal that, yes, they monitor inflation very carefully, but they also take into account where the economy is, and one has to ask yourself what the purpose of any interest rate hikes would be at this stage, given that the economy is already quite weak. And I think she partly mentioned this in the context of the money market, which is starting to price in very steep interest rate hikes reasonably soon, which I think is unlikely.